Good morning, everybody. Christian from Serene Schedule with my analysis this morning for the majors for Thursday, the 14th of March, 2019. Okay, so let's get started. I'll open the euro against US dollar, naked chart, and then apply my FxUltimate template. Okay, let's have a look here. Just wait for it just to upload, and straight away I get a sell signal. Okay, on my monthly time frame. I'm just going to hide this box. That's the position size calculator. Okay, so here looking at the matrix, you can clearly see that the monthly and weekly are predominantly red. Daily is red, but then it's more speckled, and then by the time you go down to the 4 hour, you can start to see more positive sentiment coming through, which has an impact on the 1 hour, 30 minute, and 50 minute lower. So it should be telling me that I should be seeing negativity, and rightly so. I can see that taking place. We started all the way up here in 2018 at the start, and then we've been falling systematically through the months of 2018 to where we currently stand. However, here on the hard right edge, okay, you got to say to yourself, hang on, what's been happening here? You'll notice that there's been a lot of hesitation to drop any further. Now, if I'm looking to sell, then ideally, well, you can clearly see that I have not had a continuation of that selling sentiment here on the hard right edge, especially through the last 1, 2, 3, 4, 5, 6 consecutive months. The prices failed to make a new low. Now that's a concern, because if I'm looking to sell, I can't afford to have price just moving sideways for prolonged periods of time. Okay, and if I just clean the chart and then just zoom in so you can see a bit more of it, you'll notice that there's a lot of apprehension that's crept into price action. A lot of wicks, shadows, small bodies. Okay, this emphasizes that there has been opportunities within the market, a lot of speculative opportunities in the market, but a lot of very aggressive profit taking. So the underlying center is that clearly traders are around, but they're more speculative and they're more uncertain in terms of of holding their positions for a long period of time. So they're trading aggressively intraday particularly, okay, which has led to a lot of these candlesticks exuding or showing us a lot of wicks or shadow. Okay, purely here you'll notice that the 50 period moving average is doing a fantastic job of supporting price. Okay, down the bottom over here, the 20 is above price, and then the 200 is way above price. So in order to be trading a strong trend, we can see that we have an intermediate downtrend, negative trend. But in terms of the long-term trend on the monthly, you'll notice that we're trading between the two moving averages. In this case, the fast moving average and the slow, i.e. the fast and the intermediate traders, and the long term. So 200 above price, 20 above price. Okay, the 50. So we can see that the overall prognosis is still negative, but we have this support mechanism in the shape of the 50 period moving average. But also, if you look further back in time, you'll notice at this particular point over time, we've had a lot of hesitation, and it's the reason why the pivots are projecting quite close together at this particular point. It's then re-emphasizing or emphasizing that this level over time has been a major obstacle. So therefore, if I'm trading anywhere near this area, I need to be aware that there's a lot more exposure to risk. Okay, and that's probably the reason why traders have and are trading the way they are. Their trading style is mimicking exactly that uncertainty, that apprehension. And what we don't want to do, though, is to be trying to sell this if prices are going to aggressively revert to the upside like it's done over so many months at this particular point. So essentially what we need to see is a more defining candle break low, a more defining candle of intent, i.e. full-bodied, very little wick or shadow as possible, to emphasize that yes, we have continuation. We saw one of those back in October of last year into the August low. Did we see a continuation of it going into November? No, we saw most of the time price moving to the upside. Okay, so we don't want to get caught in a scenario where we aren't getting that liquidity, that continuation of fall. So for the month of, certainly for what's left of March, we've got another 16 days of March, we're looking for that continuation to drive low. We have to see a bearish engulfing candle close lower than the current level in order to see opportunities to the downside. Because the longer price goes sideways and we do not get a closed low, essentially what's going to happen is we're going to start to see more bullish underlying sentiment coming through. And you know what they're saying is, the stronger the support, i.e. here you can see through August didn't break, you're going to start to find people who've actively been holding this throughout 2018 going, hang on a moment, I'm not seeing any further lows. I'm going to start to then consolidate my profit or either close my positions, and then you'll start to see more of a bullish underlying sentiment moving through. If that was the case, then we need to see a bullish engulfing candle, okay, moving higher than the previous month, ideally above the 20-period moving average, to then open up the taps towards that all-important 2018 high point, which is a good 800 odd pips away from where we're currently trading. So we do have a viable target, both high and low, if we do get a statement candle at this particular point. We need to decide if we are to see continued selling, then we need to see a statement close low. If we are to see this as a strong support and prices then more of a bullish undertone, then we need to see a bullish engulfing candle, a strong sentiment candle. We need to see that blue arrow appear to then concur that yes, euro is looking strong against the US dollar. And particularly if we can get it above the all-important 20-period moving average, then we have a solid foundation, and then we'll see a higher high. Drop down to the weekly, you'll see that the MACD is positive now. Okay, so here again you'll notice on the weekly that price since August of last year has been falling into the 200, pulling back, falling into the 200 yet again. In this case, no pullback. It's just been sitting within this very tight consolidation for almost the best part, I think it was 18 weeks or so. And here on the hard right edge, we start to see price breaking out. Still a negative, very indecisive candle pulling back. Last week's candle was a bearish engulfing candle, engulfing and breaking out of all of this consolidation. But now we're looking for continuation, and we haven't had it because price has spent most of this week moving in the other direction. So there's still a lot of uncertainty, and it's the reason why I'm looking for more of a stronger confirmation on my monthly chart. Okay, because it's clearly, even when we do get breakouts on our weekly to the downside, it's not coming through. We're not getting that continuation, that follow through, which is what we really need to see. So the arrows, the candlesticks as a whole are still red, so it's telling me that the underlying sentiment is negative. The last arrow is red. The candlesticks are red. The 20 is above price, the 50 above price, but in this case, the 200 is also above price. So there's a lot more negative weight here on the hard right edge. The RMO is negative. Okay, but clearly you can see that currently the RMO is still tracking higher than the previous one, so we have a support level. But there again, we can see price is moving the opposite direction. She's actually trading back into the underside of the 200-period moving average. Okay, she's now trading above the weekly pivot, above the daily pivot, but still below the 200, so the monthly pivot. Okay, MACD is above. So because we've been going sideways for so long, those sellers have now dwindled, which has then emphasized that there's been more bullish undertone. So we're getting a lot of mixed signals at this particular point, pretty much reiterating the current standard of where we're trading at the moment on the bigger time frames. So here again, if you're looking to trade this particular pair, understand that you're trading with a lot of risk. Look at the 20-period moving average, a very strong resistance of price each time price is reverted to the upside, which is primarily where the monthly pivot is going to be essentially. So if we drop down to the daily now, you'll notice we run into a lot of obstacles to the upside. Okay, so we've seen a major pullback recently, but there again, we need to be above the monthly pivot. But the time we get above the monthly pivot, I go back to my weekly now and apply that 20-period moving average as a level that we need to be above, because you can see price, even when she traded above it, she always pulls back again and remain below it. If I drop down now to the daily, you'll see that that line I'm drawing over there, we need to be above that. Okay, and you can see not so long ago, we had a blue arrow, blue candle, RMO was strong, OSMO was strong, trading above the 20 and 50, but that level, that moving average was at that particular point. You can see we didn't get any follow through. We had a lot of wicks, a lot of shadow, shooting stars, and the outcome was a negativity. So here again, there's a lot of uncertainty the lower you drop. Okay, so yeah, that's the reason why I like to look at the bigger picture, because in the bigger picture, if I've not seen price do anything for 6 months, why the hell would I want to get into it on a shorter time frame and trade with dumb money? If there's no genuine, convincing underlying sentiment driving the market, why the hell would I want to be trading it intraday? Okay, it's far better to stand back, get a stronger confirmation, i.e. look at a weekly and monthly close, and then trade comfortably off the back end of that. Because if we get a genuine break low, we have the 2015, 2016, and 2017 lows to drive to, which is in excess of almost 700 pips. So if I lose 200 or 300 pips, give me that signal, not a problem. And vice versa to the upside. So here again, just keep an eye on that. I'd rather draw a trigger alert to the high and the low on the weekly as a first requirement, and then readdress it. Take care.